Joining us, James Lee is the U.S. and China Internet Analyst at Mizuho. James, you've got a buy rating on Baidu with a $350 price target, so that's the context here for the conversation. The thing's already been ripping. What do you make of some of the weakness this morning? Is this just a break from the rally, or is there something troubling in the numbers?
Great, thanks for having me. Obviously, the stock has had a very good run since December, so a lot of good news on the results, which numbers came in really strong. I think was somewhat baked into the stock price, that being first. And also secondly, last year we noticed there's a lot of value investors came to Baidu because stock was trading really cheap, only about 2 times EBITDA. So I think some of the value funds, as the valuations start to expand and Baidu getting into innovative, disruptive business like autonomous driving, so we may see a little bit of rotation for value funds out of stock. That creates opportunity for additional growth fund to come into the name. Yeah. So,
James, the rare pullback in Baidu basically is what you're saying. This hasn't happened in a while. When they talk about growth going forward, about 26 to 39% core revenue growth in the first quarter. We were just talking about some of the U.S. software companies here like Twilio that are also generating big top-line growth. Why does one choose Baidu as opposed to some of the other software-specific plays? I mean, is this like an Amazon in the making where you can still kind of get in early on a growing giant? What's the case on a relative basis compared to other high-growth companies?
Yeah, that's a good question. You want to play Baidu in 2 ways. One is on the recovery of their online advertising business, right? When COVID happened last year, was not very good for Baidu, right? Revenue went negative last year because a lot of Baidu's exposures actually to offline industries like healthcare, education, financial services. As China's recovery starts to open, obviously it has about maybe 6 months lead over U.S. at this point in time. We're going to see advertising recovery. That's what that 33% midpoint represents, and that be consensus by about 12 points, that being first. Second is the expansion of Baidu's business into autonomous driving. Now, the opportunity in autonomous driving in terms of TAM is pretty meaningful. It's close to $100 billion US, and Baidu has a leading position. They have 80% of the market share in terms of testing miles in China. Compared to Waymo in the U.S., Waymo has about 65%. That means Baidu is more dominant than Waymo's position in the U.S. And we believe that business is valued at $40 billion. So combination of the two that lead us to our target price at $350.
James, how do you know when looking through the stock, what makes you feel comfortable that this recovery hasn't been already priced in? I mean, we're talking like recovery for a beat up sector, advertising, but we're already above where Baidu was a year ago, 2 years ago. I mean, you name it. We're at all-time highs in the stock already.
Yeah. So two things you got to look for, right? If we look at, we kind of value the business based on some of the parts, right? On the core business, we value that business based on FY22 EBITDA only at 7 times. If you look at Google right now, same double-digit growth company, Google is trading close to 10 times. So as that business continues to recover, you're going to see multiple expansion from 7 potentially to 10, right? That being first. And also second is the realization of autonomous driving business. We value that business at $40 billion. That's our base case. The bullish case could be bringing to $80 billion. So potentially you still have a lot of room for growth in terms of valuation, in terms of estimates, in terms of multiple expansions there. So we are very comfortable with where the stock is at this point.
James, how does this compare to the way you view other Chinese companies right now? We've seen a lot less of the upside moves for some of the other popular names. I mean, thinking about Alibaba off the highs. I mean, Tencent's been ripping pretty sharply too. Is this a broad kind of regional play as well? Or is there, if you have to pick one, is Baidu the way to do it?
Yeah, Baidu by far is our top pick here. But obviously, other Chinese internet name, whether it's Baba and Tencent, they also have their particular secular growth. Baba is specifically focused on e-commerce. that still has a lot of leg to growth. If you think about e-commerce in China, penetration of retail is only 25%, still have a lot of room to grow. And Tencent obviously has become a powerhouse in terms of online gaming and also fintech as well. That still has a lot of leg to growth. But in terms of potential upside versus not totally appreciated by investors in general, that definitely goes to Baidu. We still see multiple expansion in the business, and therefore this is a topic in the China internet universe.